kind of exactly what we expected for the day. If we go to the higher time frame daily chart, I mentioned the daily bias. We're looking for basically either a consolidation day, or I could see both sides. The reason for that being we had a Thursday retracement late into the session into the TGIF range for the weekly expansion. And normally when you get a retracement on the weekly candle on Thursday, Friday will consolidate or continue to move back into the range. So you don't want to be trading on a Friday, especially if there's no news, or you have to try and kind of play it the way where you can frame both sides, and then you're looking at different markets, intermarket correlation, and SMT at the highs and lows to try and figure out a bias. I was kind of looking at both sides. If you look at the 15-minute chart here, let me turn on. I could argue a delayed protraction into a New York continuation. That's what I sent into if you just kind of follow along predictions chat with me. So scroll up to predictions chat at the start of the morning at 9:29. So I said M15 plus the order block could see expansion to the upside at 9:30. So we had this down closing candle range with the fair value gap, tapped into it at 9 o'clock, 9:15ish, and then we got the upside expansion right at 9:30. Took out the short-term high, and we had SMT there. Now, since we don't have 8:30 news, since we don't have 10 a.m. news, we're looking for time dynamics to play out, right? So if we're bullish, we're going to look for that open high, low close, and timed low and timed high. In this case, we're bearish. I'll explain why, but high form between 9:30 and 10, low form between 10:30 and 11 o'clock. Okay, so we came up, swept the high. We had SMT on the highs here between NASDAQ and ES, and ES was also displacing through their bullish PD rays and holding the bearish PD rays. So we had a SIBI there, traded up into it, held it. Same thing here, kind of a stop run at 9:30 above this swing high, and the SMT is going to be extremely important there for kind of figuring out if we want to continue lower. Now, I continue to watch to make sure that the 15-minute chart is giving us some feedback that we want to see. And if you look at the candle bodies here, holding that SIBI, and then this one is displacing through mean threshold of this bullish order block. So this would have been a bullish order block if we tapped into it here, which we did. In this case, we're displacing through mean threshold. Therefore, it's an indication that we may want to move lower, right? If you go to the 5-minute chart, what do we have here? Well, we have a high, low, higher high that is then displaced through at 9:55, creating a breaker in price action. So that would be your change in the state of delivery. We have the breaker in price. And now we also have some SIBIs that were forming on the way down on the 1-minute chart. So we have this 1-minute SIBI here. We trade up into it. Now, we do not need to see premium. So the two kind of entries that normally you're looking for, or at least that I'm looking for, is either a premium retracement if we're going short, or a bearish breaker with a fair value gap. In this case, we had the breaker. We had the fair value gap that lines up on top of it. So I don't need to see it reach premium. Therefore, I don't need to see it traded back into this gap. I want to see this gap left open. I want to use this gap as my entry. So I entered short here around 10:04, 10:05-ish. You can see the execution in futures trades. And if you continue to scroll down in predictions, ES did just sweep the ERL. So if you look at 10:12, ES did just sweep the external range liquidity, but looking for NASDAQ continuation, preferably down into the 1-hour order block plus the bullish order block, 19,942-ish. Relying on time of day. Okay, so if I take this screenshot and I put it up on the screen here, this was the post. ES did just sweep the ERL, but looking for NQ continuation. So what does that mean? Well, ES at the time of that post, this was our AM session low from yesterday. So that's an important time-based liquidity pool. We had swept that at 10 o'clock. Now, I was not expecting for ES to sweep this and NASDAQ to kind of reverse with SMT there. I wanted to see continuation down. Now, the rest of this, preferably down to the bullish order block, 19,942. That's a little bit more of an advanced concept, so don't feel like you have to understand why. But basically, when we're using fair value gaps, preferably you want to see the order block touched as well. If we fail to see an order block touch on a retracement into a fair value gap, normally you either have a deep retracement or it's going to reverse. That's when, if you're looking at the AM session, you'll have deep retracement sometimes when we missed an order block on a retracement like previously. Anyways, that being said, we have this inefficiency. We tapped into it here. Did we touch the order block? No. We expanded up, started to reverse down. So I'm looking at this liquidity here and this bullish order block that we failed to touch into while we traded into some of this gap. It's really, really specific. I know it's going to be really rare that you use it, but it was just a really, really clean target, at least for me, and it made sense. So that's why I was saying, okay, we're going to look at that bullish order block relying on time of day. What does that mean? Time of day, if we're bearish, is going to be that low at 10:30 to 11 o'clock. So eventually we started to displace down, really, really consolidating and accumulating in here. Difficult price action to be in. A lot of mental capital. Like I was in that short and it was just killing me with burning up my mental capital. But this is where it's going to be important to look at the lower time frame SMTs. This is what momentum SMT is. Whenever you have these kind of short-term stop runs, this will create another impulse like down. And notice you have a swing high here, entered short in there, broke down, took out this low, trim stop to there. Another retracement leg. Do we take out the retracement leg low? No. Therefore, the stop stays up here. Retraces up, moves back down, breaks the low. Trim your stop to there. Retraces up, breaks back down, trim stop to there. Okay, and then we continue down. We did put a new low at 10:33. I wasn't expecting that to just be the low of the day. We didn't really touch anything of importance at this time. So time is right here, 10:33. Is the price correct? No. We're looking for the price to either be a 15-minute or an hourly PD array to be traded into. We didn't touch either one here. Therefore, this is the wrong time of the day to put, or it's going to be the wrong swing low to be put in. Okay. And then eventually, what do we do? Trace back up into the breaker again. This is why breaker is one of the strongest PD arrays. Eventually expand down. We got a bearish order block here. Touches into it a couple times. Boom, slams all the way down. Touches the ERL from yesterday's AM session. And then eventually we trade all the way through with one candle down almost perfectly to that bullish order block from here. Okay. Almost perfectly. Boom, right at 952. So correct time, correct price. That would be an ideal exit. You can see the exits also posted in futures trades there. But I mean, kind of all over the place. We had lack of precision and all this consolidation mess, but then there was still time and price precision that was good enough, at least for me to kind of frame a setup and scalp just kind of the end of the week. And I'll post a screenshot here if you want to see it, if it'll let me. There you go. So shorted right basically on this candle, 1003. Continue to add pyramids on all the retracement legs that I felt necessary. And then took it off on the order block and the ERL there. So I didn't feel comfortable streaming today just because of how choppy it was in the first opening range. Like from 930 to 950, it was super choppy. We're already expecting kind of difficult price action. I was even surprised there was this nice displacement leg there. But I mean, it was literally like almost an hour, not an hour, but 40 minutes, 50 minutes of just consolidating. And that's really tough because you're going to have consistent thoughts of, do I trim stop here? Do I close out before it hits my stop? Like there was a certain point where my stop was here. We got within 4 points of that take profit and it retraced all the way back up within 2 points of my my SL. And I had my finger over the close button. I was, all right, should I just close it here? But then we had the SMT. I'm like, all right, I'm just going to leave it. But it's really difficult. So what I suggest is if you're in a consolidation like this or price isn't moving where you want to be, have a journal out. And it should be like a during the trade journal. So while you're in the position, while it's moving towards your stop loss, while it's moving towards your take profit, while it's holding PD raise you want to see held, it's like basically just positive self-talk as you continue down. So for example, I basically wrote a page out for today because I had time since I wasn't streaming. So part of it is currently short with the model. Waiting for time of day to reach targets. I am not scared of any retracements, nor will I move my stop until the first take profit is hit. So that was at like 1017. And then as we retraced, 1019 just retraced. I'm not worried because stop is in a good position. PD rays are still holding. 1025, another deep retracement. This one's a little bit worse. 1025 was here. So this one's a little bit scarier after the 1017 retracement. And then boom, 10 TP hit 1052. Proud of myself for holding the position, not trimming stop exactly too tight where I'm getting stopped out on the retracement legs and trusting the model. Like that's what you want to be doing optimally if you're in these kind of consolidation periods, because the last thing you want to do is just have all those subconscious thoughts fight back and forth. And then eventually when you have negative thoughts, it's just going to win out and you're either going to close position early or you're going to do something you shouldn't have done in the first place. Maybe you over leverage, you take a stop loss, you overtrade, etc. Not good positions to be in. But I mean, overall, what is this? Pretty clean time dynamics, except just the consolidation is difficult. The 5-minute breaker is marked out from the wick. Now, you could have marked out the entire candle here. I don't really see the necessity in doing that. I'm going to mark out the strongest point of the candle, which is going to be the last down closing candle and before the move up that takes liquidity. And it's going to be the wick of that. So that's going to be the 5-minute breaker for value up there, also holding pretty well. And that's going to be really scary in the beginning if you don't understand what you're looking for, right? Multiple taps in the gap, multiple taps in the breaker, deep retracements, but stop positioning would have held, right? So if you had a stop on this candle, like I said before, that would be your for value gap candle. Then to here, you take out that short-term low, retraces up, take out that short-term low, boom, here, retraces, takes out that short-term low, here, and then you could basically keep it there, or you could continue to move it down as we hold PD raise. But that's basically all the expansion I'm looking for in the morning. To be honest, there's a lot of bias of liquidity now up here. That's low resistance. We have like smooth highs, and yeah, all this on ES too is a little bit too smooth for my liking. So we could retrace back into PM session. I don't really care. Oh, we also hit -2 to -2.5. That's actually quite nice. Obviously, there's a little bit part of me I was like, damn, I could have held it a little bit longer down into this range or down into further into the order block. It's always going to be like that. There's always going to be parts of yourself that's like, oh, I could have done better. I could have. But you deal with the what is, right? Not the what if. What if you entered here? What if you entered, or what if you held it longer? What if you didn't show them your stop? It doesn't matter. At the end of the day, you have to deal with the what is. So if you took a win, you took a loss, you deal with that, and you completely first have to accept responsibility for any outcome that comes your way, because it is you're the one pushing the button. But then also, how do you build and how do you learn from that? That's the only way you're going to improve. If you constantly kind of just brush things to the side, oh, it's not a big deal, or I'm not going to do that again. You will do that again if you don't actually fix the problem. And a lot of times there's an illusion that's causing the problem that's deeply rooted in some other belief that you may have or some other experience that was either negative or someone told you about it, and it's just all kind of a lie. So that's why these, pre-market analysis for your psychology is important. During the market, during a trade, if you're in a demo trade, is going to be important. I find that during is like some of the best, because then you actually don't worry about, consolidation like this. And then post. So after the trade is done, after you took a stop, after you took TP, how can you then reward yourself for executing properly, if you executed properly, which you should always be executing properly? And then what are some tiny things you should be fixing? You should always be the coach more than the critic, and you should always be cheerleading yourself, because rewarding yourself and talking good to yourself is always going to produce better results than being overly critical, right? You're never going to, if you're always critical of yourself, it's not going to be like a good look. You're not going to really want to take your own advice. Think about it. If you have a friend that comes to you and says something in a nice way because they have the best interest for you, you're going to probably take that to heart rather than someone kind of screaming and yelling at you, which you may be doing to yourself in your own journal. So it's just kind of tiny things like that, which have huge impacts on your psychology in this. And keeping that mental capital at the top of its game is going to be super important every day. And obviously later down the line, when you're maybe dealing with more capital, or you're dealing with higher trade frequency because you are comfortable with your model, keeping that mental capital is going to be of utmost responsibility to you. And that also just comes with, not worrying about the P&L, and really like the way you can sift your thoughts of, if this is a good thought, a bad thought, is it P&L based? There's really two kind of methodologies to trading. It's either going to be you're thinking about the P&L, either the utilization of the money that you're making, or it's unrealized profit, or it's realized profit, or it's the what if I made this money, or what if I got out of drawdown, all of those, right? So P&L is a lot of what ifs, the things that you can't control. This is external locus. You can't deal if you have no control over if you win or lose. No control. You can do things that'll maybe mitigate when you lose and when you win. But when you're in a high quality setup, there's variance, right? You flip the coin, you're not going to be able to control if it's a heads or tails. You know, it's maybe there's a percentage base, which, you know, if you have a model, it's a percentage base, but you don't have any control over that specific flip if it's going to be a win or a loss, right? So the P&L, the what ifs, the external locus of control, the things you can't focus on will always produce bad mentality. Things you can't focus on is the execution and the building of good habits. So becoming a trader, becoming internally focused, so internal locus of control. All that stuff is how you actually be successful. Right? Is focusing on what can I do? What are the things that I can control? How do I observe the market? How do I approach it with the best mentality to then gain the most use out of the day? Because you're either, and Justin Werland talks about this a lot, but there's always something to grow from the market. It's either going to be you grow your P&L, or you grow in your understanding. So you grow in wisdom. So you must always take the opportunities that the market's giving you. You're either going to take a loss and you have to grow in your wisdom, or you're going to take a win and you're going to grow in your P&L and your wisdom. There's always kind of the double-edged like that. There's two sides of it. Okay. So anyways, I'm just kind of yapping now, but I hope you found it insightful. We're obviously kind of way further off than I would assume. 114 points on a Friday. Not bad. I'll post not stream recording, but the recap onto YouTube, probably publicly, because I think there was enough information in here where it's useful for most people. And yeah, so I'll talk to you guys probably tomorrow, Lord willing, or maybe Sunday. I'm trying to think. I may be busy tomorrow, so I'll let you guys know if we do a backtesting or Q&A stream tomorrow or sometime during the weekend. I'll make sure to let you guys know like an hour or two beforehand. But anyways, take care of the rest of the day. Journal, screenshot, whatever it may be. And I will talk to you guys soon. Peace.